If you're the single producer, you need to be able to produce to a point where you're at a run rate that would get you 250,000 for a year before you bring on that first employee.
The whole purpose of this show is to engage with business owners and be able to answer questions for people that will give them some insight and perspective on how to grow and scale a business. Not only leadership, but real life examples. This is the golden moment. I would do business with you right now.
Welcome back, everybody. We have some special guests with us tonight. It is going to be a truly remarkable evening here on 10X Owners Live, and we are so excited to have you with us. So for those of you who are first joining us, 10X Owners Live is a community that we host every single Tuesday evening for business owners who are looking to grow and scale themselves personally, professionally, and financially, as well as grow and scale their business. So that's what we're excited to be here tonight to talk about. We're going to talk about something really important tonight, and that is money. We're going to be talking about money. So we've got our money guys on tonight. Are they with us?
Yeah, we're here, Ashlee.
You're here. There they are. There they are, bringing the heat. So our very, very special guests of honor tonight are Mr. Jeff Jessen and Mr. Dwayne Baker. Jeff Jessen is our EVP of Finance here at Cardone Ventures, and Jeff Jessen is our EVP. His title is really long. Let's see if I can remember it. EVP of Strategic Partnerships and Transformational Growth. Did I get it right, Dwayne?
That was close enough.
Close enough. Okay. Yeah. What is it? You got to tell us what it is.
I am the EVP of Strategic Transformation and Partnerships.
Okay, I was close.
And all that really means is all the deals that we do here at Cardone Ventures, I run point on them. So if we invest in a company and put together a plan on how to grow and scale that company, I run that program.
That's awesome. Well, we're excited to kick things off with you guys tonight. What I would like to do is I would love to get some people raising their hands tonight. If you have questions about budgeting, finance, one of the things that we talk about a lot with business owners, Enrique and I hear this all the time when we're on calls is, I need people, but I just don't have the budget for it. Or my cash flow is low and I don't know how to actually, increase that. Or I have too many people and I'm not sure what to do. We run into a lot of people and finance problems. So I'd love to touch on that tonight, if that's something you guys are okay with.
Yeah, it sounds fantastic.
All right. Well, let's kick things off here. So I know that Ryan Soaptack's got his hand raised. I think we should do a lot of Q&A tonight. How do you guys feel about that?
That sounds great. Let's do it, Ashlee.
Let's make it happen. Ryan, there he is.
Hey guys, what's happening?
How are we doing, Ryan?
Hey.
I'm doing great. Thanks for calling me up. As soon as I heard that it was the finance guys, I wanted to come up and say something that I learned from the 10X 360 and ask you guys a question. So the question is, I'll preface it. Like I had an issue. I don't know if it's a question or a comment, but I had an issue where I didn't want to bring on, and I don't know if other business owners have had this. I didn't want to bring on somebody to like comb through my finances. And I don't know what it was. It was some kind of thing that was stopping me from going, hey, I need to bring this person on. And I don't want someone to look in there. I don't know, I don't know what they're going to find. Am I doing things right? Am I doing, and I had this weird feeling about it. Then I took the 10X 360. I hired a CFO. And within the first week, he found things I was doing wrong with my invoicing that helped me bill. Like I've paid his wage 15 times just from things that he's found. And so I don't know if you guys have experienced that or what, if you guys can speak to that, or if other people have had that kind of, hold back, I guess,
Yeah, I think for most business owners, where they first, kind of run into trouble when it comes to the financial side of the business is not looking at financial statements. So, most businesses, when they're in that first break point, 0 to 3 million, they are relying on that third party, that bookkeeper, that CPA firm to produce financial statements. And, in a lot of cases, they're not even looking at those financial statements when they're getting them, and they're not holding those people accountable. Now, once you get through that first break point and you start bringing on internal financial statement people that are responsible for that, that's when it becomes, to Ryan's point, it becomes important to bring on the right level of experience based on where you're at in those breakpoints. So he referenced that he brought on a CFO. What was the size of your business again, Ryan?
6.5.
6.5. Yeah. So he's at the top end of that second breakpoint, 3 to 8 million. And that's usually when you want to bring on, that first internal person that's kind of responsible for your finances and your accounting side of the business, and the reason is they can produce financials timely. They can find things in the financials that a bookkeeper or CPA firm that you're relying on that's looking at them once a month, and they're just taking all the activity that's happened for the month and they're just producing a financial package and sending it to you. They're not digging in. They're not seeing the day-to-day of what's happening. So when you get to the level where, from a forward investment standpoint, you're at the point financially where it makes sense to bring that role on, full time and be responsible for the financials, you can oftentimes find some really hidden dollars. And a lot of times when we're working with business owners, that we find hidden dollars just by giving them, some of the insights we give them at the 360. Like, if you're not in that position where you're bringing someone on internally, are you at a point where you're holding those bookkeepers and CPAs accountable to send you financial statements every single month on the 15th of the month, or you're setting a deadline and holding them accountable to sending you that information? That's always the first step. Like, get financial statements and start looking at them and start reviewing them with the bookkeeper or the CPA firm, because you'll oftentimes see trends when you start looking. Those financial statements aren't just, something you kick out to the side and say, hey, someone else is going to deal with this. They are the financial health. They're the picture of your business. So quit thinking of them as financial statements. Think of them as, this is actually showing me how healthy my business is. So you as the business owner, it's your responsibility to have a level of understanding of those, so that if there's trends that are either good trends or trends that are bad. And once you get to that point of bringing that person in-house, a lot of times you can uncover additional detail like what Ryan's sharing with us. But the first step is always make sure you're looking at financial statements consistently, because those can also be used for your strategic planning, for your budgeting, for the forward-looking pieces of business strategy. But until you have the historical picture and you know exactly where you're at, you can't actually use that information to predict the future or help you try to predict the future.
Jeff, we're getting some additional questions on top of what Ryan was saying. Sasha Taylor commented and said, is monthly consistent enough? Which I think is a great question.
Yeah, when you're first starting, so we talk about two different things. So financial statements, looking at them monthly is probably enough. KPIs in the business, so key performance indicators, you can set up KPIs that will tell you whether the business is trending positively or negatively. So as an example, Brandon talks about this all the time on Owners Live, is we have certain KPIs in our business that we share every single day. The sales team has their number of calls they're making every day. That's shared. The number of deals closed, the value of those deals, the cash collected from those deals. The marketing team, what ads are we running? What is the conversion rate of those ads? What's the cost of those ads? It just goes through department by department, and we share those on our morning call that lasts 15 minutes, but it's all KPI based. So you as a business owner, you can have KPIs in the business that are the drivers of that business that you're talking about every day or once a week, whatever makes sense based on, the amount of data you have available. But the financial statements as a whole, looking at that whole package, you need to be looking at least monthly. But a lot of times the information isn't complete until you've done that month-end close process. So looking at it 3 weeks into the month, when you haven't had your credit card statement come in yet, and that hasn't been put into the financial statements, may not actually give you a good picture of where you are overall. So you wait till the end of the month when you've got all your financials, all your invoicing out to clients, you've collected all the cash you're going to collect, your credit cards have come in, all your invoices from vendors you're using, you've paid those, all of that information's in there, then it gives you a good picture of how the business is performing.
Okay, that's super helpful. I'm sure that answered Sasha's question. Jeff, on top of that, I'd like to ask a question to you. You know, you're talking about different KPIs that are reported by different departments. What is reported? Obviously, I know the answer to this because I'm on these calls every morning, but what are the things that are reported by the finance team and by the accounting team?
Yeah, so internally, what we report is we have a monthly cash collection target and a monthly revenue target. So every single morning we're reporting where are we compared to those targets, and we benchmark that against the prior month and against our best month ever. So there's always two measurements in addition to just how we're progressing against the target for the month. We have two reference points. So how are we progressing against those monthly targets as compared to the best month we've ever had? And how are we compared to last month? Because our targets are always going up every month. So we're constantly being able to compare to last month, which would have been a little bit less than the current month, but our benchmark month might have been better than both those months. So making sure that we always have three reference points of how we're progressing. And that way the team's very clear on if we're behind target from our best month, or if we're behind target from last month, we know we need to pick it up if the target this month's moved up, especially.
Yeah.
One thing that I want to add. Oh, go ahead, Dwayne.
I would add something to that too. And, it kind of goes back to what Ryan was saying earlier about being afraid to share this information. In our organization, we're extremely transparent about all this. Everybody we have an all hands, an all team daily call, and we go over these numbers, right? Because if we're behind on a certain target, we need everybody to hit it with attack speed, to do everything they can do to make sure that we achieve those targets. You don't want to get to the end of the month and say, why didn't we hit our targets? And if it's because we didn't put in enough effort to achieve them, you never want that to be the answer.
Absolutely. Dwayne, that's exactly what I was going to add is the transparency component. Being an employee inside of a business. So for you business owners that are out there, that we often get the question, should I be transparent? Should I tell my team what we're making? How do I have that conversation with my staff? As you start to open up and you do start to have those conversations and you start to be more transparent with your numbers, it allows everybody to be on the same page every single day. It gives you the confidence of where you're at and exactly where you need to go. Even if you're behind target, you know it. There's clarity in it, and we know we need to push, just like Dwayne was saying. So I think that's something really important to note. So if you guys are taking notes tonight, write down the word transparency and start figuring out what that transparency can look like inside of your organization, because it's transformational if you start to utilize it. So that was great. Thank you, guys. Let's go to Miss Belinda Brown. Let's get her unmuted, see what question she has for us tonight.
Hey, everyone. Good evening. I'm new to the group.
Welcome.
This is my first time joining. Thank you. Thank you. Hi, everyone. So I've been a part of Card on You for a few weeks now, and I do appreciate what you guys are doing. I've learned a lot. So my question tonight is, I'm a childcare agency, just a single person, just myself, and I want to hit a goal of 60,000 in the next 3 months and 90 days, but I need a hire. And right now, I'm not able to afford bringing people on to put them on a payroll. I want to be able to put them on commission. So I just want to know what you guys think about it, because in order for me to hit that target, I need a team. I can't continue to do this myself anymore. So
well,
what is
Linda,
your
this is a great question, and it was actually one of the topics that I wanted us to discuss tonight, is how do you know when it's actually time to hire? So I know that you guys can break this down for Belinda. So let's answer her question and then dive even deeper into, hey, when is the right time? How do I know? How am I sure? I get that question a lot. So break it down for us, guys.
Yeah, first, let's put in the chat. We have some people that have probably been on here with us and have heard us talk about revenue per employee. How many times has Brandon talked about that? And so in the chat, let's put, what is our target for revenue per employee?
There we go. We've got some good students.
So you gotta tell us if
you guys can't see it, but they're lighting the chat up with $250K.
$250,000 per employee. So what we teach business owners is that if you're the single producer, you need to be able to produce to a point where you're at a run rate that would get you 250,000 for a year before you bring on that first employee. So that proves out that there's a demand and when you're first starting, that there's enough demand to justify bringing that role on. And then you use that 250,000 per employee as the benchmark for bringing on the next employee and the next employee. So if you bring on that first employee, then your run rate instantly changes to, I need to be at a run rate of 500,000 per year before I bring on that third employee. And if you just keep measuring and managing the business like that, then it teaches you the discipline of creating the revenue before you bring on the people. Too many business owners get into trouble where they're projecting like, oh, next year I'm going from 20 million to 30 million. I need to bring on all these people to support that additional 10 million. But then those contracts start getting delayed and they start falling through and they don't close them all. And all of a sudden they have infrastructure built for a $30 million business, but they're still running at a $20 million rate.
No, man, that makes sense. I really, really appreciate that. I needed to hear that very much. Thank you very much. Thank you.
So Belinda, I want to talk to you about something here. Brandon talks about as a solopreneur, when you are the one person in the business, something that Brandon always teaches is a concept called his 4 Ps. So I want you to write these down. It's promote, profit, process, and then you multiply with people. So as you're learning to grow and scale your organization and grow and scale yourself prior to hiring people, you've got to promote what you're doing. You got to promote who you're doing it with. You got to promote how you can help people, promote. Then you have to say, this is how I can generate a profit from it, right? We got to generate a profit from our promotion. Then we can write a process and document exactly what we did to see success with our promotion that became profitable. Now we've got the process, and now we can multiply that with people because our people have exact and clear direction on what they need to be doing next. So write those down: promote, profit, process, people.
Great. Thank you so much.
Of course.
Appreciate you taking my question.
Yeah. Thanks for joining us tonight. Welcome. We've got a number of questions here in the chat. People are talking about the $250K per employee, and they're asking, is it gross revenue? Is it net profit? Break that down for us.
Yeah, so it really depends on the industry. So a lot of businesses that are heavy, subcontractor type industries, like a general contractor, where a lot of their initial gross revenue ends up getting paid out to subcontractors, we'll have them use net revenue, or we'll put parameters in place of, if you have subcontractors that you're using consistently and you're paying them at least $85,000 a year, you would count that as one employee. So they would be a one person equivalent. So you can use either. And in the real estate game, you're obviously going to use the net revenue, not the gross revenue, if you're paying out commission instantly out of your gross. So just making sure that, and the point of the 250,000 is because industries vary. Typically, if a business is running, the data is proven that if it's running at 250,000 per employee, your profitability is somewhere between 15 and 20%. So if your business is running at that rate, but it's either higher than that or it's lower than that, you can still use that 250 as your target, and then know that you need to increase that target. And your next goal is to run at 300,000 per employee and 350,000 per employee. So we do use it as a target to kind of set the stage for the baseline for business owners, but because industries vary, it will vary some. Like we internally run at 500,000 per employee. So Brandon will not let us go below that. So when I'm building a resource plan for next year's growth, we are targeting 65 million as our low target. Our resource plan for next year will not ever put us below a 500,000 per employee rate.
But Jeff, all of my employees are stretched. I don't know what to do. I need to hire more people. How do you encourage a business owner to stay disciplined to that revenue per employee number?
Yeah, I think going back to what you had mentioned around the 4 Ps, Ashlee, is that the promote, creating it, and then the profit. So do you understand what's driving profitability in your business and the process? Because typically when businesses are stretched, it's because they don't have good process internally. They're inefficient. It's not because everyone's overworked. It's because they haven't outlined what each person's responsibilities are. What are their core competencies? What are they focused on every day? If they're successful in their job, how does that lift the business? If all of that's documented and then your team's stretched, you're probably operating at a profitability level that you can start to hire people. But if you haven't created the profit and you haven't documented how you're doing it, and there's not clear direction on what every single role in the company is spending their time on, then that's where you would take a step back, is how do I become more efficient to get that number to 250,000 so that I can hire that next wave of people.
Never confuse effort with results.
Say that again, Dwayne. Say it louder for the people.
Never confuse effort with results.
I like it. Yeah.
Everybody can say we're stretched thin. There's a lot of activity going on. You have to make sure the activities that you're doing every day that you feel are stretching you thin are actually adding to the top line or adding to the bottom line of the business.
Which is why we have very, very specific key performance indicators per department, because we don't want to look at things that are vanity metrics that are, not going to actually lead to that result that you're discussing. So we've got to look at, hey, what's actually going to drive revenue? What is actually going to bring a result to us, right? So those are the things that we want to measure. So you have to figure out inside of your business, what are things that you could be measuring that are vanity metrics? What are things that are actually driving revenue and moving the business forward? So guys, put some of those in the chats. Like, what are some of the key performance indicators that you're utilizing in your business? All the time, we have business owners that say, like, I just don't know what my KPIs should be. So take note from some of our remarkable students here on 10X Owners Live and share with us what your KPIs are. Share with us what some of those things are. Another thing that I want to bring up tonight is I see a lot of questions. There's a lot of people that have questions on, revenue per employee. How do I actually structure a compensation structure based on positions? There's a lot. We can only get into so much tonight. You guys know that. So Jeff, Dwayne, how can people get more information from you guys on understanding, hey, how do I break down my budgeting? How do I understand when it's time to bring somebody on? How do I actually create a compensation structure for people?
Yeah, so we have launched the Finance Essentials program, which is taught over 2 days. And in that program, we break down financial statements, what to look at, which statements to review, how to utilize those statements in your business. Then we teach you how to use those to strategic plan and budget and plan for where you're going. And then we teach you how to align the business, not only the employees, but potential partners down the road with where you're going. So we teach you compensation plans as well as equity structures. So as you're going to continue to grow your business, Brandon always talks about when you are growing a business to $100 million, you're going to have 5 to 10 key employees that at some point are going to become partners in your business. So just knowing that at the beginning means I got to figure out how to compensate people as I'm growing this thing. And may not only be a bonus structure. It may have to be, how do I create an equity earn-in type structure where as the business is winning and growing, I can reward those people that are helping lift that business. So over the 2 days, we focus in on the foundational elements, the financial statements, the strategic planning, and the budgeting. And then we go into the value creation of talking about, okay, what actually creates value? And then how do you engage your employees to help you create that value through compensation plans and those equity structures for bringing partners into the business?
Perfect. And for those of you guys who did not see, I know that we had a slide pulled up there for our next Finance Essentials workshop. It's going to be March 5th and 6th here in Scottsdale, Arizona. And yours truly, Mr. Jeff Jessen, will be teaching that. He'll be walking us through everything he just discussed. So if you, I know, like I said, we can only hit so many questions tonight, but if you guys do have questions, can you guys pull that slide back up? That way people can take a picture of that QR or scan that QR code. Guys, book a meeting with us. If you have questions about this, if you're wondering if it's the right fit for you, if you're not sure, if you need to figure that out, if you're like, hey, I think that I need help with those things, but I'm just not sure, or is my business too big for this? Is my business too small for this? Please book a meeting with us and we will be able to share exact insight on if this is the right fit for you. So we appreciate that. I see Dr. Jeff Young said, finance, great workshop. So he joined us a couple months ago. It's great to see you on here, Dr. Jeff. Yep, Andres Rodriguez, they're both on here saying that they highly recommend it and had a great experience. Thank you guys. So let's go over to Dr. Chris Gubbles and we'll see what he has to say tonight. Dr. Chris is a chiropractor, and I see we've got some chiros in the audience tonight asking questions.
Yeah, so my question is we are setting up compensation plans for some pay for our employees. I'm trying to set it up that once the office hits a certain amount of profit, 10% of that profit will go back to kind of like bonuses for employees. But I also want to make sure people are being rewarded for their individual production. So do you have any suggestions for like in a medically integrated office where you have different types of employees? How do you set it up, or do you have any suggestions on how to set it up so you're using a certain percent of profit once you get a certain profit amount, but you're also rewarding off of individual production?
Yeah. I'll start with this. I mean, this really goes back to, with the KPIs, making sure that, every individual on the team has KPIs they're tracking against daily, weekly, monthly in the business. And then, as you set certain targets for them and thresholds, if they meet those targets, okay, they get a certain percentage of the bonus. If they exceed those targets, maybe they get a larger percentage of the bonus pool. But yeah, it's definitely something where you got to have the KPIs in place to track the individual efforts, because otherwise you're just rewarding the whole team. And then, you're not incentivized for outstanding performance.
Chris, does that answer it?
Yeah, to some degree.
Okay, sounds good. If you need more, you can always connect with us. You know where to find me, okay? All right. Thank you. Okay, so let's go from here. We've got a question here in the chats. Zaka says, when to hire a salesperson and best practice for salesperson compensation. I've seen a number of people in the chats talking tonight specifically about commission and how do I structure commissions for my salespeople. So do you guys have any notes on that or any tips that you can provide tonight?
Yeah, I think we get this question a lot at the Finance Essentials too, because it is usually the first position that you're compensating through a compensation plan. And it really, unfortunately, depends on the business, because if you have a business where you're selling products that have a long lead cycle and the value of those products is, pretty high, then your commission structure might be set to where a salesperson can take draws against it. And then the percentage though might be smaller. Whereas if you have a lot of turn happening, you might be using a 10% or a 15% commission because the price point's smaller, but the volume is where a salesperson can make the money on it. So the first key to this though is getting financial statements, understanding the profitability of the business and understanding what the business can afford, like what would make sense. And it's not just about looking at where you're currently at, it's actually projecting out where you want to be. So if you want to end this year twice as big as you are right now, and you are looking at putting this plan in place, okay, if my 2-3 salespeople drive us to that, what does their compensation look like in total with the plans I'm proposing? And making sure you understand, because you want to, as a business owner, be the highest paying, business out there for salespeople. You hear Brandon, you hear Grant, you hear people all the time talk about, they share with you what their sales team's making, because you want to be known as the person that's paying a lot. And it's not necessarily a big salary. It's commission and results oriented. It's how do you align and give people the opportunity to be making money that they wouldn't be able to make in another organization, but it's tied to the results of you getting to where you're trying to go.
Jeff, I've heard you say historically, if you structure it correctly, salespeople pay for themselves. Is that accurate?
That is 100% accurate. Yes.
Yeah.
Well, I would say one key thing to take away there is where Jeff started with that. One, you have to understand your financials and how much profit you're generating on every product you sell. Because we see a lot of owners from time to time when they come to Finance Essentials, they are given a commission that's so large the business owner ends up making no money.
Yeah.
So definitely something you need as a business owner need to understand what your revenues are, what your price points are for your products, and then what profit margins you have on each of those products.
Of course.
So then you can, intelligently structure a compensation plan.
So Dwayne, when I come to Finance Essentials March 5th and 6th out in Scottsdale, Arizona, because I can't wait to be with you guys there because it's finance. But when I come there, am I going to be able to ask really specific questions about my business? I know that Jeff said, commission structures and compensation structures are specific to your business. Am I going to be able to walk away with, some clear understanding, some clear structure on what those could look like inside of my business?
Yes, absolutely. I mean, Jeff and I work with different businesses every day. When we think about the hundreds of businesses we work with at Cardone Ventures, it pretty much runs the span of, every industry out there. And, from our experience, we have some pretty good insights on every industry, what the profit margins are, what cost of goods sold are. So we can get really specific into your particular business when you come join us at Finance Essentials for sure.
Perfect. And for those of you who would like to join us for Finance Essentials or you have questions, we're going to keep putting this QR code up. That way you guys can go ahead and get it scanned, book a meeting with our team. We'll be able to dive deeper into this and figure out exactly what your needs are inside of your business and ensure that we're able to answer them at Finance Essentials. So we'd love to see you guys there, $4,997 per seat. And we look forward to having you. So I appreciate you pulling that back up. Let's go over to... let's see, Steve just walked away. So we're gonna move on to Brian Powell. Oh wait, Steve's coming back, but Steve, we'll come back to you. I promise we'll come back.
Love the questions, guys. I think we're getting more questions than Brandon and Natalie normally get.
I know it's quite the
This is
engagement.
exciting.
People need some help, we've got to get that money right, just like Grant says. All right, Brian, are you with us?
Yeah. Can you hear me?
We can. Brian, welcome to 10X Owners Live. What kind of business do you have?
Perfect. I have auto detailing and paint protection.
Oh, awesome. Okay. And about how big is your business?
I have 4 technicians underneath me, so I have 4 employees. And I'll be attending the scaling workshop actually the end of February.
Awesome.
So I'm definitely been getting more involved in Cardone Ventures, and just to kind of share with everybody, like that 250 per employee thing. At first, I kind of struggled with that. But then after, doing a lot of 10X Owners Lives and kind of interacting with, my man Aaron over there with you guys and everybody, I realized you got to focus on, like, for my business, I just had to focus on the higher ticket items, because right now with 4 people, I'm at $60K per head. So that gets me $250K a year. But they're in the detailing industry, there's something called ceramic coatings, which are like a long-term paint protection for your vehicle. So by focusing on just those, that's sort of like that ticket to, get it to $250K per head. So kind of like figuring that out, really excited to attend a scaling workshop. One thing I wanted to ask for the finance guys that you got on tonight would be, so obviously I run my business. I have 4 employees that I'm doing all of the administration and stuff myself. What would be the first people at my level that I would need to reach out with to consult on financially, like have an external, like CPA, a bookkeeper, like how many of those kind of people do you need in your back pocket? And what are the most important?
Yeah, I think most business owners start with kind of what I'll call a hybrid, where it's like most CPA firms do some level of bookkeeping. So internally, what you would need, and this might be you at first, but someone that enters information into the system, you might have to have that person internal. And a lot of times it ends up defaulting to the business owner or an office manager or someone like that, where you show them how to put invoices in the accounting system and you show them how to cut a check out of the accounting system or put the credit card in there. But then having that third party that is producing my monthly financial statements, and they can also be the person that does your tax return. Typically the monthly fee on those are pretty small at first. And so you can utilize those services. And that's what we would suggest, making sure you get, a good recommendation from other business owners, people on this, in this community. Reach out when you're on these calls and when you're in the community of, recommendations that are in the area you're in, and start there. But then, once you're at the kind of top end of the first break point and you're getting into break point 2, where it no longer becomes about the what, it starts to become about the who you're doing it with. That's when you'll have to actually identify, 2 other leaders in your organization that besides you that can kind of take you from that 3 million to 8 million. So you wouldn't have to bring that role in-house until you get through that like $8 million mark. And then you would have to start thinking about bringing someone that's like a accounting manager or controller type level into the business.
Yeah, definitely. I have a good shop management software that sort of like automatically does all that data entry, because we just run the cards and to take the cash the same day. So we're a cash business. I mean, it's very nice. We don't have invoices or anything like that. So, and that shop software syncs with QuickBooks. So,
That's perfect.
It seems like that would be good enough to like just partner with the CPA and have them pull the QuickBooks data and then have them do the reports kind of thing.
Yep.
Okay.
Cool. That would be perfect.
Yeah. Okay. Thank you.
Ryan, you are on the right track, my friend. That's awesome. We can't wait to see you at the scaling workshop coming up at the end of the month with Brandon. It's going to be phenomenal. Are you going to be there in person? Oh, you're muted. Give me a yes. Yes, no, yes. Awesome. Well, I can't wait to meet you. That's great. Steve, I know that you've been holding out on me here. I know you've been waiting. So let's get you unmuted to ask your question.
Hey, thank you for that. Appreciate it. So my question is there a percentage of gross revenue that you would budget for marketing of a business? Is there a 6%, 8%? Is it a 10%? What's kind of a rule of thumb for a marketing budget based on a percentage of revenue?
Yeah, unfortunately, this is another one of those areas where there's not a golden rule. What we talk about is more of the marketing, making sure that you have the data and you understand if it's working or not. So typically what we have our business owners do is start with something that's a smaller budget. Like maybe you're starting with a couple $1,000s a month and you start to spend that money on ads and different, things that you're working on, but make sure you understand if they're working and then utilize, okay, are they working? What's the return I'm getting on that investment? And then you start to increase your marketing budget because too often business owners just hire an agency. They start spending, 10, 15 grand a month with the agency and the agency's sending them stuff at the end of the month. And a lot of times to Ashlee's point, it's vanity metrics. They've, how many new followers, how many likes, and it's stuff that's not driving the business. And so you're not spending and getting a return on it. So,
Gotcha.
We usually try and target somewhere between 5 and 10% of revenue for a growing business, but it really is industry specific because some industries you can spend 2%. If it's your marketing's hitting the right target, you can continue to grow the business without spending, a big piece of the business.
Thank you. Appreciate that.
Jeff, I think that brings up something interesting too. When you look at the financial health of a business, we work with all types of businesses. There are hundreds of different industries represented on this call alone with 453 people here. So, and however many more people who are watching live on Facebook, as you look at that, like, can you give a basic statement or a basic overview on like, what does a healthy business look like from a profitability percentage?
Yeah, I don't know if there is a baseline, but typically the way that we, manage and try and target it is very much, we were talking about, we work with hundreds of businesses in all kinds of different industries. Some industries, you just know you're only going to get 2 or 3% to the bottom line. So if you're a general contractor, like, that there's somewhat of a ceiling to what you're able to get, but still trying to drive that number up as high as you can because it takes time to build the volume, which is where you get, the profitability in that industry. But then there's other industries, especially service-based industries, where you can be getting 30 or 40% to the bottom line. So understanding your business and what, the industry averages are so that you can try and drive to, outperforming those industry averages is what's important.
Yeah, I know when I'm looking at businesses and things for us to invest in as they come across my desk, it's, if you're a service-based business, like, when you think of, your gross margin on that, so we're going to sell something for $100, right? It should really only cost me $50 to produce that, right? So I'm looking at a 50% margin just kind of out the gate to start at. Obviously, there's expenses, marketing, all that comes out the end, so that's not your overall profit, but that's a baseline. And then, with software, I mean, we see software businesses that are 65%.
Completely dependent on the industry. So I appreciate you guys clearing that up for us. Let's move on over here to Dr. Patel. Dr. Patel, what question do you have for us tonight?
Thank you for taking my call. Hey, gentlemen, how you doing?
Hey, how are you?
I'm great. I'll see you guys next week, actually. But anyway, it's actually tomorrow. Not tomorrow.
It's really dark where you are.
Sorry, I'm driving.
Don't get in a wreck.
My question is, actually, Susan asked that, and if you give an outcome of how much you're making per month or per year to the staff, what are the chances of them asking, hey, you're making this much money and I'm only getting this much, and they're gonna ask for a raise? And then how do you determine, I think maybe I'm misunderstanding, but I think Brandon mentions about 85,000. Is that the cost of the employee? That it costs each employer 85,000 per head to run the business? So maybe I'm misunderstanding the number of 85,000.
Yeah, I'll address both of those. So the first one, when Ashlee was mentioning transparency, a lot of business owners, there's all different levels of being transparent with your team. You don't necessarily have to share how much profit the business is making and how much you're taking home as a business owner. But what you can share, to what Dwayne was just talking about, is the gross profit you're making per engagement with a customer. You can share those kinds of numbers where you can set targets and goals and build compensation plans off of that, knowing that the rest of the costs of the business will get you to your targeted profitability as the business owner and allow you to be able to take out of the business what your personal goals are. And then from the $85,000 side, I was talking about giving people that utilize a lot of subcontractors, where they hire a subcontract company and it might be a 3-man team that comes and works on their jobs, but they're getting billed monthly for that company that they're using. Then if they're paying that company $85,000 a year, they would count that subcontractor as one employee when they're doing their calculation of revenue per employee. They would still be targeting $250,000 per employee as that ratio. But if they're paying a subcontractor $85,000, we tell them, go ahead and use that as a metric to say that's equivalent of one full-time hire.
So does that fall under the rule of 3 then, where Brendan says hire 3 people at a time? And even, well, I guess I don't hire contractors, but in my office, but let's say I'm looking for 2 full-timers and adding another doctor. Is that considered 3 separate people, and then each one of those should be bringing in 250,000?
Correct. I think the misunderstanding sometimes business owners have is that we're saying every person needs to generate $250,000 in revenue. In your case, where they're providers, you would have certain targets of them, like what they need to be producing, and that number might be higher than $250,000 a year. What the math we have you do is take your total revenue, divide it by your number of employees, and that target needs to be, your target is $250,000. So total revenue for a year, or your run rate of revenue, because if you're constantly growing, your constant run rate's growing. So when we're doing our math internally, because every month we have targets that are growing, we can't do our math on last year we did 40 million in revenue, and now we're almost at 100 employees. We're not going to continue to do our math off 40 million in revenue, because right now we're on a run rate to do 55 million of revenue. And by the end of the year, we know the number is going to be 65 or 70 million, because that's the way we've built in the the targets, but we will not hire against our resource plan until our run rate has increased enough that we're still at least 500,000 per employee.
Okay, got it. Thank you for taking my call. Appreciate it.
Yep.
Thank you, Dr. Patel. We're excited to see you. It's going to be awesome. The one person that he lowered his hand, but I wanted to make sure that he didn't have a question, was Harold. Harold Love, I know we're seeing you here soon too. Did you get your question answered? Give me a thumbs up if you did. You're good. Okay, he's good to go. Well, we'll see you soon. That's awesome. Let's go to Miss Jackie. Hi, Jackie. Let's get you unmuted.
Good evening, everyone, and thanks for taking my question. I'm a small garden center and landscaping company, and I'm struggling a little bit with KPIs. Can you give me a couple of ideas of KPIs, for instance, for my office manager position, the person that takes care of our finances?
Yeah, a lot of times when they're non-revenue generating roles, you think of what do they do that adds value to the business, that allows you as a business owner or the people that are producing revenue to not spend time dealing with the things they're dealing with. So we set KPIs around, if she's responsible for financials, is that role closing the books by a certain date? When they close the books and they send you financial statements, like, are they accurate? So we would have a KPI around accuracy, because a lot of times you can look at a financial statement and be like, instantly, this doesn't make sense. There's an expense account that has an income balance, or there's an account that should be an asset on the balance sheet and it has a liability balance. So there's certain things, and if they're putting things in the wrong buckets, then it doesn't give you as an owner or the other people that are using those financial statements a clear picture. So then you send it back to them, they make corrections, they send it back. All of that time takes away from you generating revenue and doing what, drives the business forward. So you set the KPIs around their function and what they do, but it can be quality-based, time-based, as well as documentation of the process. So a lot of times, some of the first KPIs we build into our organization are around a person documenting what we would call an SOP, a standard operating procedure of what they do. So when I had, our accounting team first brought on their first role, we had them that quarter, they documented, I think, 55 processes in the accounting, and that their KPIs and their bonuses and incentive was tied to them completing those 55 standard operating procedures during that quarter. So each month, they had a certain amount, 10 of them, set aside that they needed to complete. And then if they completed those 10, then they were, available. And the reason you can do process as well as quality and time is that the process will make you more efficient in the future. So make you be able to grow and scale faster.
Okay, that's great. And may I just add that up with one follow-up question? How do you pick a percentage to pay them? How do you figure out what you can give them a little extra as an incentive?
Jackie, it sounds like you need to come to our finance essentials to figure that out.
I do need to.
You do. We'll see you March 5th and 6th. That's what we're going to do. You got my phone number.
Right now, you want to come down. We've had a remarkable couple days so far.
Yes. Jackie, we'll get connected and we'll get you squared away, okay?
Thanks.
Of course. Thank you for joining us tonight. All right, guys, I keep getting some questions in the chats here about 1099s and the $250K per employee. So can you explain slowly, and for me, as if I'm a first grader trying to learn finance and understanding, how do I actually calculate this $250K per employee when it comes to 1099 workers?
Yeah, for 1099s, you can often use the same kind of target that we talked about with the subcontractors. But the key is, if you have a 1099 employees that are, critical to the business, like if you didn't have them in place, you would have to hire someone to do that role, then you would count them as part of your head count. If you have 1099 employees that are straight commission, we work with a lot of, real estate or insurance type companies that they might have 1099s that are straight commission. Then sometimes those you wouldn't necessarily include in your revenue per head count, because you're only paying them if they're generating revenue.
Okay. Hopefully that answers everybody's question in the chats. I was getting some DMs about that and a couple people posting as well. Yeah. What would critical to the business entail for a 1099?
Let's say a finance person, somebody who's doing your AR and closing your books. If you're doing them as a contractor, as a 1099, then that would be a critical function to the business, and they're not generating any revenue for you. So you need to count that in your 250 head count.
Perfect. Thank you, Dwayne. I appreciate that. I see a couple of people here that have asked questions about a virtual option for our finance essentials. We absolutely have a virtual option available March 5th and 6th here in Scottsdale, Arizona. So we'd love to have you for that. If you can't join us in person, that's totally okay. We've got you covered. We mediate to make sure that you're able to engage directly with our team, ask questions. You're in the room, basically. So I want to make sure everybody's aware of that. All the potential in the world to get your questions answered. So let's go to Miss Susan tonight. Susan, welcome to 10X Owners Live. What is your question for our phenomenal finance team here?
Thank you so much for taking my question. I appreciate that. But we own a bakery and we've doubled our income each year. We've had it for 3 years. Thank you. And a lot of it is because of Grant Cardone training. They're all on the training. They're all required to complete the training that we assign them. So I think that's been a big part of the growth. But my question is, as far as like a bakery, we make 15% profit, and we have 2 full-time employees plus myself, which is overtime, and my husband, and then 3 very, very part-time and other fill-ins. We would be working like we'd never sleep if we had that 250 per person. So
I think you're bringing up a really good point. Sorry to cut you off, but we have this a lot with restaurants too. So when you have part-time people, you would count, like if you have 4 part-time people that it takes to fill 1 shift, you would count that as 1, not each employee that's working part-time. So you would want to look at your kind of your week and say, okay, we have 5 people, but really we're only working equivalent of having 2 full-time people or 3 full-time people. Because from a wage standpoint, you're only paying them based on how much they're working. So again, going back to kind of that $85,000 per employee target, and in your industry or in restaurant industries, it could be lower than that number. Like a full-time employee could be a $40,000 a year employee. So you would just say, okay, out of these people, how many $40,000 a year employees do I actually have? And it might only be a couple when you do the math that way. But really, it's about you understanding the bottom line and the profitability of the business. So like right now, if you did the math and you were at 150,000 per employee, but you were making 15% at the bottom line, you wouldn't you would want to drive that number up, but you have a successful, profitable business. Right. But what happens more often than not is if someone's at, especially when they're down around 80,000 per employee, they're not making any money. And they actually, over time, the data shows that those businesses will go out of business unless they figure out a way to drive the revenue per employee up. So and you're never going to go from, for those of you that are just starting and you're like, man, I'm at 100,000 per employee. Like you're not going to go from 100 to 250. The goal is next quarter, I'm going to drive this to 125. Next quarter, I'm going to drive it to 150,000. Okay. And it's about you setting targets that will align with you creating what Brandon always talks about, elasticity in the business, creates room in the business. It creates profitability in the business. And unless you're tracking this stuff, you don't understand, where you're at as a business. And that's really where business owners get in trouble. They're like, everybody's busy. I need to hire more people, instead of taking a step back and saying, we're not making any money, but everyone seems busy.
Right.
Like, how do we actually make money as a business so that we can afford to hire people and continue to grow?
Right. So I was kind of wondering too, with that 250 statement, was that like, hey, maybe you're not in the right business, or maybe you need to either focus on a different type of business that you're in. So I didn't know if that was kind of a underlying message with that.
No, that is not what that means at all, right?
Okay.
I love baked goods. And I don't want you not to have a business or a bakery. I think, kudos to you for knowing what your profit margins are. Right? Most business owners we talk to have no clue. So that's your first start. And knowing that is fantastic. When we've done all the research, it's really the $250,000 number is just an average across industries. And the ones that we see that they're doing that is they're doing between 12 and 18% profitability. Right. So if you're have a business that's doing between 12 and 18% profitability, and you're creating capacity and you have a plan to grow, and that business can sustain and be successful, and you as a business owner can actually make some money and support your lifestyle. What happens is we have a lot of businesses come through that are making $100,000 for employee, and their business is a lifestyle. They're running everything they have through their business, and they're making at the end of the year they make $0.
Mm-hmm.
So our principles are trying to get you to be a successful business owner.
Right. Got it. Yeah, I'd love to make a lot more money, but I just, but we've taken a lot of the direction you've given us. Like everyone thought we should add on because we're getting busy. And I heard Brandon say, do not add on until you use every inch of your space and grow to, like, I think it was, 300, I think he said. So we took our coffee area and we made it more profitable, and the real estate now, and it's so much more efficient. So, it's like, don't spend until you get the processes. So we're doing that. We're getting the processes. So we need to grow faster for sure, but appreciate your help. Appreciate your.
Keep it up. Keep it up. You're following the
pay for it out of those reserves too.
What's that?
So pay for it out of those cash reserves you generate in the business.
Yeah.
Awesome.
Sounds good. Thank you so much.
All right. I see Brandon Soroka. He just he's got a burning comment he wants to add in regards to this. So Brandon, what do you have to add here?
Hey, I just wanted to say that I went through platforming, and what I realized is that we were at 117,000 per employee bill, and I was trying to scale that, and we got up to like 35 employees, and then basically had like 1% profit last year. So I just wanted to say that sometimes you do have to look at if you're in the right vehicle and what sort of pivots or additional service lines or profitability increases that you can add. And that's something that now that I'm with SBU, it's something that we're heavily looking at, is how can we pivot in the same space and increase that number. So
awesome.
That was all I had.
That's awesome.
Yeah.
Thank you, Brandon. Guys, Brandon has also been to a finance essentials workshop. So if you have questions, DM him on his experience. But I know that we're coming to an end here real quick here. Donna, I do not want to miss out on you. You are our last 10X friend here with your hand raised tonight. So let's get you called on. Welcome.
Wow.
Donna.
Thank you guys. Man, I feel so honored. My first time. It's so good to hear you guys. I just wanted to ask you, if my business, in order to expand, this is what I was thinking is.
Donna, what do you do?
Oh, sorry. I'm a realtor.
Okay.
And I just opened up my Airbnb business, but I wanted to expand more. So I was thinking to get more of a loan in order to acquire more, or wait till I have enough in reserve in order to get more. And when is a good time to take out a loan?
So I'll say two things. One, we always teach the principle of building, Dwayne mentioned it, but building cash reserves and setting targets to where the idea is that you can either utilize that money to expand and grow and acquire more as a business owner, or banks like to loan to people that already have money. So you can actually go get loans easier if you've proven that the business model works and you're able to generate cash and build cash reserves. So setting those targets of building those cash reserves. And when we teach that algorithm, it's your first target's to build 3 months of cash reserves. So if your operating expenses are 100,000 a month, your first target's 300,000 of cash reserves. Then your next target's 6 months of cash reserves.
Jeff, repeat that.
So if your business is doing $100,000 a month in operating expenses, so your salaries, your G&A, your rent, like those things total 100,000, your very first target of building cash reserves is to build $300,000 of cash reserves. And then your next target is to build 6 months, so 600,000 of cash reserves in that example. Then your next target is 9 months or 900,000 of cash reserves. And business owners are always like, why would I have 9 months or a year of cash reserves sitting in the bank? You may not have those in the bank. You may be utilizing those along the way, but it's really creating the discipline in the business that you're able to prove out the second P. So you've promoted, you have a business generating revenue. When you're building cash reserves, you're proving the profit side of the business. So it not only creates confidence in you as the business owner to continue to lean in and push and grow, but it also will create confidence in banks when you do go to get a loan that you are operating a profitable business, that you'll be able to pay back the loan that they're going to give you. And then adding process, once you've figured out those P's, is when you go into that scaling capacity that I heard Enrique open the show with, is that those first 2 P's are really creating scale. That's maximizing what you're doing and figuring out how to become the most profitable at what you're doing. And then you can start expanding.
Yeah, most of the time we see a lot of business owners that do it wrong. They want to expand before they're ready to expand and have that discipline Jeff talks about. And believe it or not, it's like, why would you want to expand something that doesn't make any money? Why would you want two businesses that don't make you any money? But as counterintuitive as that may seem, we see it a lot.
You're so right, Brandon. Brandon always says build, optimize, expand, and then you hit your transformational or your 10x growth goals. And we find that people go straight from build directly to expand, but they never optimize. So they'll never actually hit their 10x growth goals. We see it way more times than you guys would believe. But that's what we're here to do, is help you optimize. So if you guys want to learn more about optimizing your business, obviously this is the finance pillar. This is one of the foundational pieces in your business that Jeff and Dwayne can serve you guys in to really help you put some structure and process in place to set you up for success so that you can profitably expand your business. Right, guys?
Yep, exactly, Ashlee.
That's it. Well, I know that we're at time tonight, and I thank everybody for joining us here on 10X Owners Live. Jeff, Dwayne, special thank you to you guys. I see James is giving you guys a round of applause. Thank you so much for joining us and sharing everything that you did. All of these money nuggets, we need those, right? We got to keep passing them around. So thank you guys for joining us tonight. I'm going to pass it over to Enrique and Josh to tell us a little more about Finance Essentials and some options that we've got going on. And if anybody has questions specific to the Finance Essentials, he'll be answering those.
The whole purpose of this show is to engage with business owners and be able to answer questions for people that will give them some insight and perspective on how to grow and scale a business. Not only leadership, but real life examples. This is the golden moment. I would do business with you right now.